What's up, everybody? Happy midday. This has been a boring market as we have been just watching the S&P 500 drag ass like a fat lady with couch cushions in her ass. Let's talk about today's market headlines because once again, we're being told everything's fine in a way that feels aggressively selective. Layoffs are down, the trade deficit is shrinking, and Nvidia is printing money again. And yet, workers are still stuck, demand is quietly cooling, and AI chips now require full cash payment up front, which is never a red flag unless you understand finance. So today isn't a panic update, it's a context update because, well, we are in a context market nowadays. So take that as you will, because the market right now is doing that thing where it smiles at you while tightening its grip around your neck. Let's go ahead, make like some butt cheeks and break this thing down. So to kick things off, the labor market. It's good news if you ignore the entire last year, but December layoffs hit their lowest level since mid-2024. 35,553 announced cuts. Cue the champagne, right? Challenger even called it a positive sign. And yes, December was quieter. Hiring plans were also the highest for December since 2022. This sounds bullish until you zoom out just 1 inch. Here's the party that they don't tell you. Well, 2025 job cuts totaled 1.2 million. That's up 58% year over year, and it's the highest since 2020. Q4 alone was the worst Q4 since 2008. So December didn't fix anything. It just stopped bleeding for 30 days. This isn't a hiring boom. This is companies saying, let's pause layoffs and see how bad 2026 actually is. And that's the real labor story. The structural problem here, though, job openings, they're falling. Hiring rate is stuck at 3.2%, and there are 1.1 unemployed people per job opening. This is the worst ratio since early 2021. This is what economists call a no hire, no fire economy. Translation, you're not getting laid off, but you're also not getting promoted, rehired, or paid any more money. That's not strength. That's stagnation with a LinkedIn smile. Next up, we're going to talk about the trade deficit. Winning, or are we just buying less? The next headline, the U.S. trade deficit just hit its lowest level since 2009. That sounds, keyword, sounds incredible. The trade gap collapsed nearly 40%. Imports dropped hard. Exports hit record highs. Markets hear that and think, growth. America is winning again. But as with everything else in America, there's a catch. Imports didn't fall because exports exploded. Imports fell because domestic demand softened. Consumer goods imports, well, that's the lowest since 2020. Pharmaceutical imports, massive drops. And industrial supplies, lowest since 2021. That's not consumers flexing. That's consumers pulling back quietly. Meanwhile, the only imports rising, computers, telecom equipment, and AI infrastructure. So let's call this what it is. America isn't buying less. America is buying different. Less stuff, more servers, and this helps GDP math, yes. But it also tells you where growth is concentrated and, well, where it isn't. And clearly it is not concentrated with your average day consumer. Now, let's talk. We got 2 Nvidia stories we got to break down here. They're asking people to pay first and ask questions never, because this story matters more than people realize. Nvidia is now requiring full upfront payment for H200 chips in China. No deposits, no refunds, no configuration charges or changes, and no cancel button. That's not a sales policy, that's a risk transfer policy. The translation, Nvidia says, we'll sell you the chips, but if regulators block them, that's your problem. Now, why are they doing this? Because Nvidia already got burned once. $5.5 billion write down last year. They're not doing that again, I promise you that much. And yet, despite all this risk, Chinese demand is insane. Over 2 million chips have been ordered, only 700,000 in inventory. It's $27,000 per chip, and they have to pay full cash up front. That's not a bubble. That's desperation meets dominance. But here's the market implication, as Dennis Reynolds would say. Nvidia isn't just selling chips anymore. They're acting like a central bank. They decide who gets compute, on what terms, with what risk. That's a power move right there. That is some BDE, big dick energy. But it also means the AI trade in 2026 shifts from growth at any cost to cash flow, discipline, and geopolitics. That's a very, very different game. Now, our next Nvidia story here is CES, Bank of America, and the power move. So let's talk about why Nvidia suddenly decided to unload its entire future roadmap at CES like it was a clearance sale at Costco. Because this week wasn't just about China, it wasn't just about H200s, it was Nvidia saying, we see competition and we're not waiting. We don't care. So first things first, Bank of America reset Nvidia's outlook and doubled down. After Nvidia's CES keynote, Bank of America came out and said, in plain English, Nvidia is still their top AI pick, demand is still very high, AI scaling remains intact, and the stock is trading at 19x earnings. Basically the same multiple as the S&P 500. Let that sink in. The most dominant AI company on earth, growing earnings north of 35% CAGR, generating 40% plus of free cash flow margins. This is priced like Coca-Cola with a GPU. That's not bubble math, that's power discounting risk. Why CES mattered more than GTC this year, though? Normally, Nvidia saves its biggest bombs for GTC in March, but that didn't happen this time. At CES, Nvidia unveiled Vera Rubin, the next-gen platform, announced 6 new AI chips, rolled out pod-level memory systems, pushed beyond LLMs into physical AI, and publicly framed robotaxis, factories, and autonomy as the next frontier. Translation, this wasn't hype, this was defensive offense. AMD has Helios coming, Google has TPUs, and China is forcing local alternatives. Nvidia didn't panic, they accelerated the timeline. Now, why the Intel and Grok moves suddenly make sense, let's go ahead and rewind one step real quick. Think about it like this. Nvidia, it invests in Intel, licensed Grok's SRAM tech, requires full cash upfront from China, and rolls out Rubin early. This is not randomness. This is Nvidia locking the ecosystem. Chips, networking, memory, software, manufacturing, physical AI. They're not trying to win benchmarks. They're trying to make it possible or impossible to leave. That's why Bank of America kept their target at $275 a share. But here's the risk they flagged. Bank of America wasn't blindly bullish, thank God. They flagged real risks. China shipment, there's uncertainty in that. They have competition from hyperscalers, lumpy enterprise spending, CapEx cycles are starting to slow down. And here's the key insight. Nvidia isn't fighting a demand problem, they're fighting a political and structural one. That's why the upfront payment requirement exists, that's why Rubin is early, and that's why they're expanding beyond pure LLM compute. This is a company managing dominance, not chasing growth. So how this connects back to the economy exactly, let's go ahead and connect the dots here. The labor market, it's stalled, it's not collapsing. Trade, well, that's improving because demand is selective. AI is still absorbing capital, and Nvidia is enforcing discipline. This is not a 2021 style melt-up economy. This is a capital rationing economy. Money flows to productivity, infrastructure, energy, and compute. Not vibes, not excess labor, not cheap credit. That's why markets aren't panicking and also aren't euphoric. So here's the real takeaway today. December layoffs, slowing is not a recovery. Trade shrinking is not a boom, and AI spending is not free anymore. And Nvidia, well, Nvidia isn't just selling chips, they're selling certainty at a premium, paid in cash, upfront, like your favorite drug dealer. If you understand that, you understand this market. This has been Trades and Gains, though, powered by Investor Central Club. I'll see you in the next update. Make sure you like, subscribe, comment, leave your hottest take down below, and what you are most excited about investing in 2026. I'll catch you guys for the end of day flow scanner show. That happens at about 4:15 p.m. Eastern on Twitch, where we currently are live right now, watching SPY just ping pong back and forth and data burn the entire market. So hope y'all are having a great day. Catch you in the next one.